morning, traders. Welcome to the Stock Market Morning Prep video for Monday, October 26th. We have a big slew of data coming out this week. We have earnings. We have a two-day Fed meeting. If they're going to raise rates this week, they're going to sit pat. It's just been a wild roller coaster ride with the Fed. They might as well just do it already. It's just ridiculous how they keep going back and forth. But this tells you that there is something out there that's really spooky for the Federal Reserve and worldwide central banks. ECB did it. They mentioned it on Thursday. That sparked a big rally. Friday, China cuts their reserve ratios to the banks. So there's nothing good out there. But bad news is good news at the moment, and that's where we are at these elevated levels. Wanted to show you quickly on the McClellan Oscillator, very reliable indicator for overbought, oversold reading. And we're back here at 26, guys. I know it sounds crazy. If you look at the daily charts, a lot of the momentum indicators are pointing overbought. But again, that's not a sell signal. So we do have some more room to run. I understand. Wow, Mark, that's crazy. Well, if you're day trading, it's not going to really matter. But it might matter if you open up, 10, 15 handles and then looking for an entry. And a lot of the times with these algorithms and HFTs, they just continue to push this market straight up with actually no pullback or very little pullback, to say the least. So McClellan Oscillator is showing us that we still have plenty of room to run to the upside, right? Let's take a look at the indices. Now, would you want to buy this? Absolutely not. I won't even think about even touching this market for your portfolio up here at these elevated levels. Technology is just through the roof, and Amazon's up 90% plus percent this year alone. It's just absolutely crazy. Stay away, guys. You will get a better shot at it. We're up about 14 out of 17 trading days straight up. And this is what happened on Friday. This is what happened on Thursday. We broke back above the 200-day moving average. Do I think it's bullish? Yeah, I do think it's bullish. But at one point, you need a little bit of a pullback. But sometimes what happens is when you don't get this pullback, and it does happen, you're going to get an extreme amount of selling. Now, put-call ratio is measuring 80. Remember, it's inversely correlated. The lower the number, right, the more bullish the market participants are, which as a contrarian, it's a contrarian read, you'd want to be more bearish, okay? Vice versa, with the higher number of puts being bought, you want to be actually more bullish. So the put call is reading about 80, right? The VIX right now is even back to the lower end of the band. And I will show you a chart tomorrow. I didn't get a chance to put it on tonight, but you'll see the extreme, how the S&P is at upper end of the range and the VIX at the lower end of the range at these large extremes. So there's going to be a revision to the mean happen. Wednesday, just a key point, if you look at the Traders Almanac, starts the seasonality of strength. Best time of the year, going into the Santa Claus rally. However, we have been up for 16 plus trading days. Remember, 2 weeks ago, nobody wanted to buy stocks. So what has changed? Just because ECB, Mario Draghi said we're going to continue QE, and now the Federal Reserve is waiting, sitting pat to see if they're going to raise rates or not, because the economy now is so weak that they can't raise a quarter of a point. That's crazy. So there's something out there that they're not telling us, and we don't know for sure what it is, and nor do we want to start making accusations. We just want to trade the charts and trade what you see. So we wanted to show you here, guys. This really is not an area where you'd want to be buying the market at the moment. Let's take a look at the Russell. Russell here giving us a huge red flag. So we had the S&P way above the 200, and the Russell has not even getting even close to break above the 38% retracement. So does that tell you if that's not a red flag? But that doesn't mean that you can't trade the long side. Just for the overall longer term, guys, just be careful here. Okay? Transports has not broken above the 200-day moving average. Seasonal strength comes in the transportation sector. It's going to need to prove itself now. If we can get back above this 200 and start really catapulting to the upside, then I do think that we could have continued upside. Do I think it's going to happen starting today and keep going? It's going to need a pullback, guys. There's going to be a take profit. We also are at the end of the month, which that means we have window dressing. We have mutual funds, hedge fund managers dressing up their positions and obviously defending their positions. So if we go lower, it's not going to be much lower for this week. Okay, so just keep that in mind. All right, take a look at the diamonds. Again, you see above the 200. It's stretched, extremely stretched, into this big area of resistance, okay? Big band of resistance up here. All right, take a look at the Qs. Q's big doji, and as you can see here, the Qs have been stellar all year and all of 2014. So it continues to perform. But guys, just be careful here. You know, don't be chasing. The markets will give you an opportunity to get in. You have to believe that. Don't chase the market. It's absolutely crazy for what is happening right now. And again, in August 24th here, there is absolutely no change from here other than PE ratios in the S&P are even more elevated than they were here, okay? And aside from printing fake money again. So guys, grab a reality check here and say to yourself, do I want to buy up here? No, you don't want to buy up here. You want to wait for a pullback, okay, for the longer term traders. For the day traders, pick a spot, reduce your exposure. We have extreme volatility. Anything can happen at any given moment, okay? Hope it helps everybody. We'll speak to you tomorrow. Take care.